Good morning, everybody. Welcome to the Flow Show, Tuesday, 20th of August. I'm back from my little short break. Not for long, though. I'm on another one later on this week. But it's good to be back and get stuck into markets. I hope you've all been well. Just before we kick off, you can see there on your screen our trader funding program. If you're not part of it already, do check it out. Your low-risk way of scaling up your trading account. If you want to look at some of the higher accounts that we have available there, you can trade up to $1 million depending on the assessment there. I'm sure a lot of you already know about funding programs and other competitors, shall we say. We are not the cheapest, but we don't, or the others don't offer the level of support that we do. Free time on ForexAnalytix, one-to-one sessions with the main man Blake, and all the support you get here at ForexAnalytix. So check that out. I shall pop the link in the chat room for you there if you want to go and have a look at that. Right, cracking on. Morning, K-Man. How you doing, mate?
Hey, good morning, Ryan. Good morning, everybody. Yeah, still recovering from my holiday, but yeah, I'm doing fine, man. Doing fine. Back in the saddle since yesterday, so yeah. Doing good. I hope your little break was, or your little breaks are going well.
Yeah, they are. Yeah, splitting things up, trying to cover as much of this summer holiday with the kids as possible without taking too much away from the screens. But you had a good break as well?
Yeah, very good. Thank you. Lots of quality family time. Also went to Belgium, had my Tokyo branch of the family over.
Nice.
I finally know what I'm going to be grandfather of. It's going to be a boy.
Oh, congrats, mate. Congrats.
Cheers.
Yeah, well done, mate. Oh, blimey. Grandfather K.
Yeah,
Oh,
I'm
dear.
already scared.
You better get your babysitting duty calendar already sorted out, mate. When
Yeah,
you're
yeah,
called up.
yeah, yeah, yeah. I'll have to make some space in my coaching program for my grandson.
What, to coach him? Right, let's get cracking then and getting stuck into markets. Please forgive me if I repeat any bits and bobs that obviously Kay's covered the last day or whatever. But we'll go over it anyway. Going to kick off over in China. They fixed their rate down at the 713s. It was creeping up to 715s, but they pulled it down back to the 713s, down nearly 100 pips on yesterday's fix. They kept their 1-year LPR loan prime rate and 5-year LPR unchanged. As you can see there, those two rates there. The 1 year unchanged 3.35, 5-year 3.85. So no other changes of rates other than those ones we got a few weeks ago that came a bit out of the blue. Over in Japan, various people are throwing their hats into the rings to replace Kishida later on. We've had the digital minister, Taro Kono. He plans to announce his running. He's at the LDP, and the former economic security minister, Takayuki Kobayashi, is also said to be in the running. So as I say, lots of people are going to start putting their hats forward. August 26th is, I think, the declaration time for all those, but we'll probably see plenty more from that. No idea about any of those guys, but we'll deal with that in due course.
Whoops.
Yeah, go on, mate.
Yeah, sorry. Oh, sorry about that background noise. Yeah, I mean, as I was saying yesterday, the vote for replacing Kishida will be held as an LDP head, will be held on 27th of September. And so far, all those who are expected to be in the running have already said that they will be. So it's all going pretty much as expected after the Kishida's surprise announcement he would retire.
Yeah, very much so. Over at the Bank of Japan, Bloomberg threw up a story overnight or this morning saying that a research note from the bank has indicated that a rate hike is still on the table. Now, banks do this a lot. They have economists and they have people who come in and do research pieces. It doesn't mean it's a direct voice of the BOJ. So what these people write doesn't mean that the BOJ will take that on board and use it for policy. But anyway, this story's been flagged up. The main summary from this report or these research notes is saying that price setting behaviours are shifting amid an intensified upward pressure on wages. Now, obviously, Bloomberg being Bloomberg have drawn their own conclusion that this means that rate hikes are still going. We did see a little bit of a downward move in yen pairs on the back of that drop. But as I said, lots of central banks do these research notes, getting in academics and whatnot to write up pieces. It doesn't really change much. We know that they may look to hike again. They're waiting for calmer markets to prevail, and obviously data and whatnot to fall into line. But anyway, that got the market wobbling this morning. Over at the RBA, we've had their minutes out as well, pretty much in line in terms of their policy stance. The board considered the case to raise rates, but decided to a steady outcome was better balanced on the risks. They said that it's possible the cash rate would have to stay steady for an extended period. Members agreed it's unlikely rates would be cut in the short term, and an immediate hike in rates could be justified if risks to inflation had increased materially. Keeping rates steady for a longer period than implied by markets could help restrain inflation. Now, some of the big Aussie banks are calling bollocks to the RBA and their possibility of hiking at least. They've started cutting rates on term deposits. Commonwealth Bank cut the rate on its term deposits by 50 basis points last week. NAB and ANZ followed up yesterday with ANZ cutting theirs by 80 basis points. So the banks at least not giving in to the RBA's hawkish comments. Now, these banks, it's a bit different to some of the other countries. They can move rates around as they see fit. It doesn't necessarily have to follow any moves in monetary policy. But the fact that they're cutting rates, as I say, calls out what I've been saying for a couple of weeks, that the RBA is talking out its arse if it's thinking that rate hikes are needed, and they're more likely to be following with cuts at some point. When that is, I don't know. Someone who is cutting is the Riksbank. They cut this morning to 3.5%, 25 pips as expected. They say the policy rate can be cut 2 or 3 more times this year. Riksbank Governor Thieden saying that inflation expectations are in line with our assessment and policy to adapt gradually as risks remain. Anything else from the Riksbank, mate? Or
it's been extremely well telegraphed, that cut coming over the past months, really. So no big surprises. And as a matter of fact, barring a few algo moves, Stocky hasn't moved on the back of it at all. It was all very much as expected. I have no view on the Swedish krona right now, apart from the fact that it is a bit of an accelerated euro. When the euro does well, risk does well on the other side, Swedish krona tends to do even a little bit better, and that's mainly it. We didn't see much of a move on the back of the Riksbank anyway.
Yeah, they're very good at forward guidance and taking any surprises out, aren't they? Which isn't good for trading. It's not good for trading volatility, but at least you know where you stand with those guys compared to someone like the RBA.
Yeah, absolutely. I mean, the Nordic banks have a tendency of being relatively open to the markets as well. Norges Bank is a bit the same. It's a different animal to trade Norwegian kroner and Swedish kroner, of course, but no, they do have the habit of communicating a lot and communicating well to the markets. They don't like to really surprise markets that much.
Yeah, exactly. A little bit of data out this morning. Over in Germany, we had some PPI data coming in round about as expected. So not as much a drop year on year as last month, coming in at minus 0.8% and rising on the month 0.2%. Still some deflationary or disinflationary pressures seen there. We had some final numbers, CPI numbers from the Eurozone, all pretty much unchanged. Core CPI coming in unchanged 2.9% over the flash. Headline CPI also coming in unchanged over the flash, 2.6%, a pip up on last month though, so no real changes there. Fed's Kashkari was out last night or yesterday saying debate about potentially cutting rates in September is an appropriate one to have. The balance of risks have shifted more towards the labour market and away from the inflation side of our dual mandate. Inflation is making progress and the labour market is showing some concerning signs, pretty much echoing what a lot of the other Fed heads have been saying, including the head man himself. And that's obviously the focus, the main focus this week as we head over into Jackson's Hole, where we get to hear what those guys, what Powell and anyone else is going to say regarding their respective central banks. Obviously, everyone and his dog are throwing up, pieces, what they expect of Powell to do and whatnot. But just put them all in a big pile and set fire to them would be my advice. Just listen to what he says and take his direction from that, not what anyone else thinks about what he's going to say. Bank of America Securities out with a little piece, one of their flow pieces, saying foreign demand outside of US hours drove the dollar higher this year, but European-based investors have recently flipped to net short the dollar. The dollar's appeal to foreigners has declined. They see the euro-dollar uptrend to 112 as both US and Europe-based investors chasing the move. They say there's also room for the Aussie to rise as European-based investors further pare back dollar longs, US dollar longs. And it says there's more US hours euro dollar vol into the US elections. So just saying, pair as they are saying, a lot of people get out the dollar. No surprise for that, as you can see with current price moves going on. Speaking of the Fed, a poll sees the Fed now cutting rate by 75 basis points this year, just over half of 101 economists say. That's up from 50 basis points in July. I do note, just looking at the CME Fed Watch, that we're now, normal service has been resumed, shall we say. We're pricing 75% chance of a 25 pip cut. Whereas that was the other way, pricing a 50 basis point cut a couple of weeks ago. So the market coming back round to a more sensible line of thinking. Over in the UK, I don't know if Kay mentioned this yesterday, but the new PM is already under fire regarding strikes. Did you mention that yesterday, Kay?
No, not yet, Ryan.
So Starmer, what he did in his first days was agree pay hikes for doctor strike, for junior doctor strike, who they've been striking for quite some time. So he vowed to resolve that. He did in the first day. He also agreed a pay deal for one of the transport unions. However, that's now kicked off because some of the other unions, other doctors, other train unions, transport unions, now want their previously agreed pay deals to be brought in line with these new ones. So he's facing another batch of strikes. So as far as fixing it has been concerned, he's just made the matter worse. So the UK is now heading towards more strikes coming in medical services and transport as well. Nice work, Captain. The US and China have agreed to work more closely in times of financial stress, according to some headlines around the grounds. Over with this Gaza stuff, Israel stuff, apparently Netanyahu has accepted the latest proposal put forward by US Secretary of State Blinken. But Hamas is still umming and ahhing about it, saying it's not what they have been given previously. So that's not heading towards any sort of resolution, although it should be taken as a bit of a positive that both sides are talking. We did hear potentially that Iran postponed the retaliatory strike last week to avoid derailing the ceasefire talks in Gaza, but an Iranian foreign minister spokesman said the ceasefire in Gaza is unrelated to Iran's retaliation plans. So that's still bubbling over. I'm assuming, Kay, that looking at the oil price, the fact that nothing happened in the latter part of last week pulled the rug out from under that risk element. And,
Chinese
data adding to the downfall.
Yeah, that's your weekend risk gone away partially at least. But yeah, one side can accept and the other one refuse, as Hamas has already said that they refuse that proposal. Netanyahu can then accept it, but if nobody else accepts it, then he's the one who will have the good role, the good cop role in there, right? I think there's a lot of ping pong to be had there around or around phones or so. Yeah, I don't know how to really read it, because once one refuses, there's another round of rockets flying. So until something really positive happens on the ground, I think we'll have to keep it as it's still ongoing.
Yeah, I mean, from what I can make out, and as Iran has said, their retaliation is still on the table. Maybe they are holding off a bit, but last week it was coming to a bit of crescendo across Tuesday, Wednesday was when they were expected to do something. They didn't. So the move in oil looks like the market got a bit bored waiting for that and sees some of that risk coming off a bit. Obviously, some of the China data noted last week wasn't the best, industrial production and the like. So, as I was saying, all through this rally in oil, if that Iran risk dissipates, we get back to trading the fundamentals. It's shown you exactly again what happens. Take the risk rug out of it, and the fundamentals take over. So, again, we're not out the woods. If we do get a retaliation, maybe if talks break down, we'll see oil jumping again. After that, we need to see what type of retaliation it is, but the fundamentals will always take over in the end. So keep that in mind.
We had really 4 big spikes, and every spike is ending up a little lower, as your picture shows really well, and that's where the fundamentals take over again. So if you look at this, is still not a higher for longer picture, right?
Yeah, exactly. And it's an important example to use when you're talking about fundamentals versus geopolitical headlines. What wins out overall in the end? Yes, there's risk, but then there's the use of a commodity, and at the moment that's the weaker side of the thing. Lastly, we've got this ongoing stuff going on in Ukraine, who apparently took out a third bridge in the Kursk region. Zelensky's now pushing for the West to let him use long-range weapons to strike further into Russia. That's been a bit of a red line for Western allies, shall we say, to allow the use of these weapons inside Russian territory. Zelensky's pushing for that, though. Putin has been remarkably quiet, which I don't know if is more dangerous than good at the moment regarding his response. But it has been an escalation over the last week or so. It does keep things elevated, even if markets still aren't really paying attention that much to it. But it's all going into the pot. But we are a couple of DEFCON levels, or DEFCON level higher, in my opinion, in this conflict than we were a couple of weeks ago. So still one to keep in the back of your mind. Anything else, Kate?
No, I think you covered everything for today, mate.
Good. Right, let's crack on. Look at what's going on. I'm going to look at a couple of things, just a couple of trades that I'm still in at the moment. I only had a couple of bits on going into my break last week. Kiwi US dollar, that was a long I took last week down into that 60 level below. That's playing nicely, getting a nice little bounce off there. Really, I'm looking at this range, this wider range, 58s, 62s. We're heading up towards this 62s area. That's going to be a big old level, as you can see, plenty of action up there recently. This is all more in part of what's going on in the dollar rather than the Kiwi. So that's the contender here. We know what the RBNZ are doing with rates. So obviously being in a cut cycle, we're not seeing the Kiwi rally. So that's all being driven by the US side, as is a lot of these pairs versus the dollar at the moment. So for me, I've been slicing and dicing, got a little bit left. I'll be looking at some of these high levels for chopping that off. Don't know if I want to reverse it. If we get up the top here, I may do. I think when you're looking at what's happening in the dollar and the Fed and everything else going on, we're seeing this quite strong move as rate expectations jump up and whatnot. But these are the sort of levels that become decent stretch points. So if we get Powell, well, I'd say Powell this week, Kay, it's more a case of whether he's not as dovish as the market has been expected, rather than being dovish. We know they're heading towards cuts. The market got a little bit excited over the last couple of weeks, as we know, in terms of how big those cuts are. But if he comes out and says, yeah, maybe you're looking at a September hike, then a pause, or we're not going to go 50s or anything stupid like that. Maybe we've got a bit of a top forming in some of these dollar pairs.
Yeah, I agree. And I was talking about that yesterday as well. I think the market is dying for him to give them the 50 basis points, and I personally don't think he's going to give the market the 50 basis points that it's looking for this week. He will probably. I mean, he left the door open already a good few times on the rate cut, so that is probably always talk conditionally, of course, but that's probably a done thing. And as I said, I mean, data will show us whether a bigger cut is warranted. We do have another labor report and another CPI report out before the FOMC, so we should be fixed on whether it's going to be 25 or 50, but I don't think that Powell is giving the market the 50 BPs on a plate to this week.
No, exactly. And you missed all that fun, didn't you, when we were pricing intermeeting cuts and all sorts of... I was about to that one, yeah.
Yeah, I was just right there. That was on the last Monday or so that I was here, where dollar yen absolutely collapsed and everything collapsed. And then some intermeeting cut pricing and stuff. Oh no, perhaps that was just the day after. That was completely bonkers. I mean, how on earth will they do it if you have the worst that happened was really a 0.2% increase in the jobs market, which is important because he has been hammering on it. The trend the upside trend of unemployment rate is there right now, because we're coming from the 3s and now we're back in the 4s. But is it going to warrant anything dramatic? No, I don't think so. And actually, they have been announcing it quite reasonably well. I mean, if the job market turns around, we will act. But there shouldn't be any panic there, right?
Yeah, exactly. So, I mean, I expect that we'll get, probably the dollar continuing in this vein into Powell, but I can certainly see him putting the blocks on this dollar weakness. And as I say, if you're looking for levels, these are the big old levels you want to watch. If we can't get through there, then potentially we've got a top in the Kiwi, and we see the dollar coming back a little bit more. Same can be said for euro dollar, and I'm going to look at me wider charts, which I tend to do now and again, because we've had this decent move. We're up testing some of these longer term range tops up here, 111 being one of those in particular. Okay, so if you're looking at the range that we've got, sort of, you know, at 111s down to 105s, we're not really in a breakout situation yet. There are some breakouts of trend lines and whatnot going on. We're breaking above 110, obviously, but the wider ranges, the bigger levels, you've got to keep an eye on, because we're still holding those for now. So it still keeps us in this range. So really for euro dollar, need to bust out this 111. We're starting to find a little bit of support into 110, low 110s. That's going to be important. Need to maintain that just to break us out of this 110 bit of range. But we know we've had tries up here at 111 that have faltered. So need to bust that, get above there. If we do that, maybe we're on for testing the 112 level, which again is one of these big long-term levels. It's a bit like almost like the 105 down below. Above there, just to show you the wider picture, we have 115, which is an absolute monster level. That is a bit like the 105 down below. So ranges within ranges within ranges at the moment, but we're not seeing a breakout. Again, these are the big levels that I'll be watching over Powell. If the dollar's going to weaken, it has to knock out these levels and keep them knocked out. If we don't, I will be potentially interested in a short, particularly at that 112 level, if it's seen up there, because anything above that, something must have changed. And if nothing has really changed, the Fed are only going to cut 25 pips in September and take a slow approach, I can't see why this will keep going much higher. So taking a wider picture view on this one, a wider view of the picture, bigger levels that are in play, rather than getting into some of the messier levels my everyday charts tend to show. Dollar yen's been all over the shop as per normal. It's been up and down, headlines, whatnot. I still haven't got a clue. I don't trust this one at all. It has been holding where it's needed to hold, though, down into the 145s. We have been screwing around this 147. I saw we got the break above 148, but then we got into the 149s and couldn't go no further. So what was your view on this one coming back, Kay, with a sort of bit of clearer mind on it?
Well, yesterday's return made me think exactly in a mini version of what we saw the day that my last day in the office 2 weeks ago on the 5th. Yesterday was a mini version of it on the Asian session, and we did get the rebound. Well, sticking my neck out, I think we are, well, at least into Friday, right? Yeah, the dollar is offered. There's no doubt about it. Just look around the whole spectrum. Yen is no exception, but I would assume that we start to range a little bit more from here. There is very little fundamental reason to start trading below 140, for instance, or even 141 from here. And there is little reason, looking at the dollar globally, to start trading above those highs that we saw. I do have a bit of levels up there in the 149s where it stopped dead. So to me, we are in a bit of a range, and especially into Friday. And then on UADA, we'll be talking on Friday as well in Parliament, and then we have Powell in the hole. So I mean, that duo should tell us whether we trade closer to 140, or if in turn we are going to trade closer, maybe even back above 150. Because when I look at the JGB yields, I'm not that impressed either, right? So I'm not following those moves lower actually right now. I'm really putting into my head, I'm rather looking at the other side and a bit of a bounce back. As we can see there, you have an up and down move, but we are well below the 1%. And you're talking about the biggest JGB contract there, the 10-year. If the market would be really thinking that the Bank of Japan is going to continue to hike on a regular pace, that thing should be trading at 1% back above pretty soon. Or perhaps already would have done. But we know that all the rest of the yields are coming down and blah blah blah. There's all sort of reasons for it not to be up there, and positioning as well, because the market is already short Japanese bonds. But if the Bank of Japan really is serious, that thing is going to be trading back at 1%, perhaps even come Friday, and then you might be looking at the dollar yen going in for a retest under 142 and probably closer to 140. But for the time being, I'm rather in a violent, because the vols are very high, they don't come off. So 150 points on a statement is something that we need to take into account.
Yeah, very much so. Now, just sitting down, I've only been off for a few days, obviously, but just sitting down and looking at some pairs, like euro dollar, we're at this point again where we've got a big event coming up, and we're just sitting on some big levels, like the 111, obviously their cable up mooching against the 130. We had that bigger level up there back in July, and obviously the higher one last year. Dollar CAD, that's sitting down on the zone again, the big 136, 135.90 or 80, 135.85 zone again. So we've got this situation where we've got big risk events and pairs trading on these levels. If we were trading on these levels normally, I'll probably be, have the bag open and a shovel going. But because we've got these events coming up, they can create extra volatility. We could see some of these levels break. Again, I haven't said it for a while, Gavin, but I think it's going to be a case we come through this week and see where we sit after these events. I am looking to trade this dollar CAD one into this zone. I'm still running sell stops, but I'm going to be mindful. We've got CPI today from Canada, and obviously Jackson's Hole later on. So it is a risk that you see the data headlines flushing out these levels, but then the market has its moment, runs the stops or whatever, and then sits back above it. So it catches everyone out, and then we back where we started. So lots of these pairs are sitting on these big levels. So you've got to be mindful of them if you're looking to trade and know the risk events that are coming up, and manage your trades accordingly to those. Last one before I hand it over to Kay. Euro sterling back into this traffic area. 85.20s down to the figure that we've traded so many times before, ahead of the 85 level. I'm still got a bit of short. I was chopping down here. Stops now yanked right down just above 85.50 on the balance of that. I don't know if we've got enough to break this level, this 85 level again. Certainly the fundamentals aren't really pointing to that. So what I would be looking for is maybe a bit of consolidation to happen between 85 and 86 for the moment. If we do break through here, though, then we could be heading all the way back down to 84s. So as usual, decent one to play the ranges, play your big figures on this one, 84s, 85s, 86s at the moment, and see what happens from there. Right, Kate, gonna bang it over to you, mate.
Mm-hmm.
Find where my buttons are. Where are we? There we go. All yours.
Okay. Not going to show too many today, because it's going to be all, I mean, apart from the Canadian CPI, we don't have that much going on today. But of course, we have to look at gold, because we are trading at fresh highs. So we just traded up at that 25 and a quarter, which I highlighted already. That is an extension of the big setback that we saw back in 2022. And we are here, 25 and a quarter. Above there, you will have, and we can only look at extensions right now. If you look at it technically, we have 25 and a half. And if you really go on the longer term, above 25 and a half, we're talking about $100 higher, around 26 and a half. People are starting to talk about 3K in gold, one step at a time, okay? Because it is driven by lower yields across the board. It is driven by geopolitics. It is typically also one that doesn't. It feels like gold is now, because if you look at other risk pairs, for instance, euro commodities, for instance, are coming down quite a bit. It does seem that all risk and all war risk and all risk on everything else on lower yields across the board, barring in Japan, is starting to be concentrated here. I have taken a little bit more off, and I'm going to monitor here. My stop on the rest is now just below, just to safeguard money from where I bought it around here. So I'm not going to say we have seen a top or we are. You have to sell it around here, but I am starting to get a bit cautious. It is probably going to go further. I'm still long-term bullish, also because of levels holding so well. Every time we have a step higher, it holds. Yesterday again, we came back towards this support area, but not even really tested it, and we bounced straight away. Today we are trading at a new high. It's still very big, okay? And that's why I'm keeping it, but I am cautious going into the end of the week, especially. So I may be tempted if we see 25.5 just to let everything go tactically and just wait for a bit. And because as I said, personally, I would not think that Powell is going to give the 50 BPs to the market on a plate for September, you know. And then we may see a bit of a setback in everything, right? It's also gone a little bit against the global risk trend right now, because if you see risk doing a lot better, people don't need to go into physical stuff and don't need to go into gold, especially that much. We would expect silver also with risk doing well, with a better economy to do well. That is also doing well, but gold is really actually starting to look a little like counter all the rest. So there's a big concentration of everything going into gold right now. And traditionally, we know what it may mean, okay? We may have one of those blow-off tops coming, as we've seen in the past, another 40, 50 bucks really, really pretty fast. That's why I'm going to leave a few flyers if the market wants to do it. But I would not be surprised sooner or later go for at least a retest of what's happening around those prior highs here in gold in the 2480s, all right? First signal would be if we start to get back below this little trend line again. I know we've been below yesterday, but the bounce was immediate as well. First little hint is a move now back below 2500, and then keep a close eye on what's happening around 2480, 85, I'd say, in gold. Silver doing very well. That is also on the train. It is. I mean, silver is one that is used as well for building arms and stuff. But it's also on the weaker dollar train as well. So it is doing pretty well. Keep an eye on what's happening again if we reach the 30 mark, because it's always been an area of interest. All right, we could also see some kind of a move, and then towards the end of the week, perhaps gradually coming back a little bit into what Powell has to say. I've got just my long-term base long, and I have not added because I wasn't really around when we did the lows, but I could have, because I was looking at it around 27, but I thought I missed the bottom, so I didn't do anything. I'm just having my base long and let it run. It does look, though, that even if Powell doesn't give the market much, if you get moves back down to mid 28s, we may find a few buyers there. Risk is doing pretty well, and testifying are the euro commod crosses, and we are here on levels in this euro Aussie. I unfortunately did not get any rally to start selling again, and we are already well back in the euro Aussie below 165. For as long as risk is doing well, this is probably going to be to still be weighed down a little bit, because somewhere, if you look at the European fundamentals, as I said yesterday, it would also be supportive if risk does well, that those crosses remain heavy. Same thing can be said from on the Euro Kiwi. Euro Kiwi is coming back to an interesting level here as well. Broken trend line. 50% of the panic move higher that we saw, especially that last move here, the 50% lies exactly or roughly where the broken trend line comes in, which is around 180.20, 180.10. And it seems that we are going at least for a test of this, all right? And in the current context, looking at equity markets as well, in current context, I would view every move back up to higher 181s or so, back to this level here as well, maybe met by a bit of selling interest. You've already showed the dollar CAD. I mean, yesterday there were those trend lines here. They got broken. I tried a little one against the trend line, didn't work, but I just re-entered a small one around here where we are now, just to play this. And I stretched the level to 135.85 because that was the low here. Just to play this over the CPI. Of course, looking at a positioning in the market, which is seemingly still pretty short Canadian dollar. It could be that any sticky number this afternoon on the CPI takes it down through there for a stop run and back down to low 135s. That is, of course, a possibility before the fight is over. As I was showing yesterday as well, that 55, 70, 90 on the S&P, it's broken, all right? And now we are talking about or looking again at what's going to happen around 56.40, and then of course those highs here. So flip the thing around. Now this 55.90 down to 55.70 is going to be your support zone on the S&P. Risk is doing still pretty well. Interest rates are stable. The market is expecting Powell to give us something. The data are mixed, but not falling out of bed. So we are still in a bit of Goldilocks soft landing kind of scenario, and equity markets just like it. Okay. I'm not planning to do much here, but going into Powell, if we would be in this 55, 70, 90 zone, that's where, in my opinion, we need to see where we are coming out of it. Okay, so around here for the time being, well, I would say don't fight it. Don't fight it. I'd be worried. Well, not overly, but I'd be a little cautious if we start to break back below 55.45 and especially below 5,500. If we start to break below 5,500 and hold it, then I think we are perhaps in another leg lower. But in the meantime, there's very little use, in my opinion, to stand in front of this for the time being. We may see a bit of moves on that pre-Powell on Thursday's PMI day, and right here I'm going to leave it right here because for the rest of the day, yeah, as I said, dollar yen up and down and in the middle, and that's how I'm planning to trade it. Perhaps starting to look at a little longer than yeah. I think we may start to find a bit of demand somewhere around those intermediate levels. Yeah, but it's extremely small, Ali. Long dollar cap, very, very small. It's not something that's going to put my account at risk because one, I'm just back from holidays, and two, CPI is always a little bit of a lottery. Okay, we just don't know where it comes out. Back over to you, Ryan.
Thank you very much, mate. Good to have you back. We'll call that a day for today. I don't think we've got much out today either on the data front. Just looking at it quickly, not a lot at all. So apart from the Canadian CPI and a couple of Fed heads later on, but I don't think they're speaking of anything important. So we'll leave it there. Thank you very much for coming to the Flow Show as always. Have a great day, and we'll see you bright and breezy tomorrow. See you later.